Good morning and good day. It's Wednesday, 8th of August 2018. Welcome to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side doubly answered in our webinar. Our goal is quick and smart, and for that daily, so let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read more about that or maybe other documents like our key information documents, the kits, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. Since August 2018 in the European Union, there are different levels of regulation, difference between retail clients and professional clients because of the ESMA regulation. So retail clients will have a maximum leverage of 30 for Forex majors. Professional clients, the high professional clients will still have the option to have a leverage up to 500. There are different levels of protection. Our professional clients will have an additional protection from our negative balance protection policy up to 50,000 British pounds, and retail clients will have an unlimited protection against negative balances. All details about that, of course, on admiralmarkets.com. Here you see more information about ESMA. So if you traded DAX 30, one of our bestseller before, margin requirement would be around about 24 euro. New, it's 600 euro. Same picture for euro dollar. So if you believe you are a professional trader, you can apply for the professional client status, and you will see here the differences, and you can see more about that and how to apply via that link here on our page. This is me. My name is Jens. I'm the German guy from Admiral Markets. We are a big international broker, over 18 country offices, so my English is made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. Usually on Wednesday, it's Giancarlo's day, but we have summer holiday. So Giancarlo is a couple of weeks in summer holiday, and for that, Jens Klatt, a colleague from my side, will doing the webinar today. And on Thursday, it's Marcus Day. On Friday, it's DAX Day. Every day, 5 days a week, our leading day traders live. And of course, if you'd like to trade Forex and CFDs, Benny benefits only us. For example, DAX 30 or euro dollar, typical spread of just 0.8 points or pips during the main trading hours without any additional commission. If you'd like to contact us, you can call us or send us an email, or YouTube or Facebook, other channels from our site. And of course, on our webpage, also our regulatory background can be found. So welcome, Jens Klatt, because Giancarlo is on holiday. Good morning, good day, Jens. What's your view to the markets today?
Yeah, hello, and also warm welcome from my end. Yes, good morning. I'm also located in Berlin, and I want to give you some ideas on my view on the markets today. And I can already point out right here that I have already 3 trades going, and we want to make them a topic, all of them. In fact, some of you might probably recall some of my thoughts from last week on Friday, when I presented a seasonal trading idea and the seasonal pattern in a very, I have to say that, a very exotic currency pair, GBP, Canadian dollar, so pound sterling against the Canadian dollar, was triggered then yesterday already. And for the upcoming 5 to 6 days, it would be really interesting to see whether the seasonal pattern will play out a 20th time then, in this case, 24 years. Yeah, so this is me, and we want to switch over right here to the chart. And you can see here, by the way, this is Euro-Japanese yen. It's a classic, let's say. We are trading Euro-Japanese yen based on our Asia breakout idea. In this case, we are looking for the high and the low within the time span of 3 a.m. German time to 10 a.m. German time, and we find out the high and the low. We look for the advantage based on this purple line. This is the exponential moving average 11, in fact, and it's a very simple approach. We say if we trade above, we go long. If the market breaks out of this range we predefined before, if we break out on the upside, or we go short if we trade below. And in fact, as you can see, we're significantly trading below that, which is, by the way, interesting. That's something we want to mention in a few minutes then. There is no picture. Someone says there's no picture. Not sure about
No,
that. Let me
not
just.
correct. We can see your screen. We see your MetaTrader, everything once.
Okay. Okay. So probably it's a problem, a local problem, I think it's called. Yeah.
So we see your
And
Euro, Japanese yen, H1 chart, everything once. If there's a technical problem on one side, technique is technique, please log out and log in again. Usually that helps. Same with your computer. If you have an issue, sometimes a restart is the best thing what you can do. Sorry for that.
okay, perfect. Yes. So yeah, what you can see is obviously we're trading below this purple line. We're breaking out of this range, which you can see here with those horizontal blue horizontal lines in this case. And so we have the short trade then. The target is in fact 1.7 hours away from our entry point. So that means in our case that if we are entering this trade here, this is the Euro Japanese yen in this case, if we entered at 128.764, but let's skip the so-called pipette here at the end. And we have a stop loss then at the high of this range, which is 129.45. There's a difference in this case of, you can see it here, 69 pips, and this is 1 R, and now you have to multiply the 69 with 1.7, and you're coming out at 127.59. This is our take profit level on the downside, and that's the first setup then for the day, in fact. And there's not much you can do, in fact. So it's a so-called make or break setup, meaning you enter the trade and then you get stopped out, or you see the market moving in your direction, hitting the take profit level. But, and this is something important to note here, or to mention here, the thing is, now let's assume that probably the market will not move towards the target, probably trend lower, but not reaching the take profit level, this line here on the downside, or trading back to the trading range, but not hitting the stop level. The trade will then automatically be closed here at 9:50 p.m. German time. So 10 minutes before, in this case, the future DAX, for example, closes, but in this case, it's the currency market. We could also wait another hour because the closing time of the FX market in this case would be 11 p.m. German time, but we take out the trade at 9:50. So because usually during this time span between 10 to 11, there's not much happening anymore in the markets, and since you even if you're a trader and probably in love with the markets, there's a point when you just say, I can take out the trade here. It's not expected, or we shouldn't expect many changes here. Instead, I go to bed and I start refreshed then the next morning. So that's it on this setup. The same setup, in fact, only with small adaptations, can be found here in the DAX. A setup which also can be found, by the way, in detail described on the webpage from Admiral Markets. I've already opened it here. Oh, by the way, this is the weekly market outlook, and we'll look at this here, GBP CAT, a little later on after I presented the ideas around the DAX. I want to show you here this article, even though I just received a message several minutes ago, 5 minutes probably ago, that the updated article now is online. So this is an article you can find on the website from Admiral Markets on the open range breakout. In this example, it's from last week. It's for the long side. Since we're trading the short side, it makes probably the most sense now to switch over to the setup then for the short side. On the website from Admiral, you can find it here via analytics and then the traders block. And if you click on this, a website opens, and there you have the fresh article here, and you can see it there, 10:50 in this case. So 10 minutes ago, and you click on this one, and then I will share the link with you here. And all the thoughts I present now can be found on a practical example. By the way, that was one example which we presented here last week in an ESMA special, by the way. So the trade is based on something which happened during this webinar, and there you can see it here. The open range was broken on the downside, and then the market reached the take profit level here. And again, what's important to note is that everything around this open range breakout is described in detail here. And currently we have a trade running based on those parameters. What we do is we look for the high and the low of the time span between 8 a.m. German time till sorry, click, 8 a.m. German time till 9:05 a.m. German time. Some of you might wonder now, why 9:05? Does it have something to do with some might call it curve fitting or so? So you optimize this time span you're trading just to get a positive result? No, it's not the case. So it would also work with 8 to 9, for example, but also 8 to 9:10. In this case, so within a neighborhood, we call it. But the reason I'm working with 9:05 is simple, because the future DAX at the Eurex starts to trade at 8 a.m. German time. So this is usually then between 8 to 9 a.m. There's only trading possible in the DAX, in the FDAX in this case, at the Eurex, and it's a time period within many professionals are, somehow start to some extent build a position, some scalp the order book a little. There's several other trading approaches like trading the opening of the FDAX in this case, and then, for example, waiting that the market pulls in one or the other direction and then drifts back towards this opening price. We're not making this a topic right here, but then at 9 a.m. German time, Xetra opens. This is when the spot market comes to life, and most of the volume pours into the market, and many more market participants than those trading between 8 to 9 a.m. German time are coming to the market. The problem is that within that time span, or around this time at 9 a.m., they're based on the lots of volume which are coming into the market tends to spike higher and lower, and it's more than often the case that you get stopped into a trade without seeing a significant break, but it's mainly based on the fact the break to new lows or to new highs, if you're looking at the time span between 8 to 9 a.m., it's a purely coincidental move. It's no significance behind that. It's mainly due to the fact that it's a quite thin market environment, respectively, that there is tendency to see a higher demand than supply, or higher supply than demand, based on all the volume pouring into the market. And to avoid getting stopped into the trade coincidentally and not having seeing a significant break, I wait for the first 5 minutes of trading and enter the markets afterwards to make sure that if a break occurs, that this is really a significant break. And this is exactly what I did. So within the time span 8 to 9:05 a.m. German time, you can draw those thin lines here, the red ones. And then you say, since we are trading below this blue line, this is again our trend filter. It's the exponential moving average 50 on a 5-minute time frame. If we trade below, we only go short. A trade breaks out of this range on the downside. If we would trade above that, we would only trade breaks on the upside in this case. So we're trading below, taking the short side, and you see the break and the market moving out our direction, but unfortunately not taking on further momentum, but instead the market now pulls back. And those green candles here, for example, they're a sign that liquidity is very thin, still very, very thin. Nevertheless, based on the performance from the Japanese yen, which we just saw here in the Euro-Japanese yen, but also if you look, for example, the currency pair like the dollar Japanese yen here, for example. So the Japanese yen, all in all, seems to be quite strong today. Or at least right now. And usually what we know is that the Japanese yen is, let's call it a risk indicator for the markets. Meaning if you see the Japanese yen strengthening, this is a sign of market participants unwinding carry trades and scaling back out of high yield positions and buying back in this case, funding currency. And now what I'm a little surprised is that there's no real pressure right now in European equity markets, even though the Japanese yen probably gives a first indication of what to expect then during the US markets or when US markets open in the afternoon. So it's very difficult to say that, because now the problem is that when, for example, looking at the Dow Jones here, what you can clearly spot is, and I'm going back here, 1 second, please. Oh. If we're going back here around to the time 1 year ago and then into January 2018, what you've seen is that the market looked very extended on the upside, even though there was no real significant pullback. And this drift higher here went hand in hand with volatility being aggressively shorted from especially big speculators. Something we spotted here already last Friday when the Commitment of Traders report was published again. And currently, market participants are the heaviest net short since January. That was shortly before we saw this flash crash, or yeah, in fact, it was a crash. In February, and this is exactly the thing. So even though the Japanese yen might make a strong impression right now, that doesn't necessarily mean that U.S. equity markets will sell off sharply then into the afternoon. But it's the first indication, and I feel comfortable holding a short position here currently in the DAX. I could imagine that probably there will be further pressure forming, especially if we drop below 12,600 points, and then I think we have a serious chance to see the market hitting our take profit at the downside. And by the way, the same is true for Euro-Japanese yen, because if such a development really happens, chances are very good that a Japanese yen will continue its current strength. And if the euro can't really start to take on momentum here, chances are very good that Euro-Japanese yen will move strongly in our favor again, or also. Even though, by the way, very important to note, both are intraday trades, so both will be closed shortly before a spot market closes. In case of the Euro-Japanese yen, it's 9:50. Same is true for the DAX trade in this case. So 9:50 p.m. German time, the trades will be closed. But, and this is the thing, there's also a swing trade, we call it, or it's, in fact, it's not a swing trade, it's a seasonal trade, and this is a trade which will be open till next week on Tuesday, and this is the trade here, and GBP CAT. So you can see the trade here. There's nevertheless some interesting notes probably now how to trade the setup, because I want to also, and once again, go back to the website from Admiral and go here to this article, which can also be found via analytics and then the traders block. And if you click on this, let's just show you how it works. Then you go here to the traders block, and there you see the weekly market outlook. It was published yesterday, and also the idea, I presented it several days before last week in the weekly webinar taking place every Friday. And let me just enter the link here in the chat box too. And what's especially, where is the cursor there? What's probably especially interesting now is what's the deal around GBP CAT. So you see it's quite much what is presented here. And the interesting thing is this setup here, which is presented there, the seasonal trade. And you can see, by the way, also here GBP CAT. So the ideas, the thoughts around this trade and all the parameters, hit rate, average gain, average loss, and all this, the time period here, 7th August, in fact, it's 2018 now. Nevertheless, you can go back 23 years from now and see that in 19 years, during this time frame, from the 7th of August till the 13th of August, GBP CAT traded lower. On average here, 187 pips. When we lost, that was only 4 times the case, or in 4 years the case. We lost on average 79 pips, and we had a maximum loss of 115 pips. The interesting thing about this is now you will probably look at those numbers and wonder, okay, and how can I trade this, or how do you trade this in general? So what are where is the entry point? Where is the stop loss in this case? When do I exit the trade? So in fact, it's very simple. You enter the trade yesterday at the end of the trading day, in my case 11 p.m. German time. So usually I wait another few hours then. In case of yesterday, and after the market took on some momentum here, something you can probably not really see here, but let me just scroll out of the chart a little, zoom out of the chart. You can see here there was a quite big green candle there. That was mainly due to the fact that yesterday pound sterling was capable of making back some of the losses of the days before. And I held this position or I waited till I entered this position and entered the position here in the morning. You can also see it here with the timestamp. If you carefully look at it, it was 10:12 German time in this case. And so the interesting thing now about this is, so this is the entry price then. Okay, we entered the price. It's a let's call it a time entry, but nevertheless, the next very important question: where do we place our stop? Now the thing is, and there you can see it already, I'm using the so-called average true range 14. So this is the average true range of the last 14 candles. And it's currently at around 100 pips, which means I'm multiplying this number here with 200 and getting 200 pips in this case as a stop width. And the thing is that this perfectly fits the numbers I'm presenting here. So if the average loss was 79 pips and the max loss during this time span was 115 pips, whichever occurred, well, a stop width of 200 pips seems to get the job done. And this is exactly what I'm doing here. So entering the market at 69.10, around 69.10, and then working with a stop 200 pips away from that, which can be found here at around 171.10 then in this case. And now I leave the trade open till next week on Monday and just hope that this current momentum here on the downside continues, and yeah, that it will be the 20th time that this currency pair moves lower within the time span from the 7th of August till the 13th of August here. And yeah, these are the thoughts then on the markets, on the positions here. So 2 intraday trades. One is here, the DAX. The second is Euro-Japanese yen. And then we have the seasonal pattern, GBP CAD. And the outcome is something we will present then next week on Wednesday. So I will tell you if the trade worked out or not next week on Wednesday, again at 11 a.m. German time in my case. And so that's it from my end. If you have any questions, please feel free to shoot them over right now so that we can answer them. And if not, all I can say is happy trading. Watch your stops and wish me all the best for those trades here, that they work out as expected in this case, yes.
Thanks to Jens Klatt. If you like Jens Klatt, you didn't know him so far, he's running some more webinars live for us. So just go to admiralmarkets.com and check the webinar section about the other webinars we are offering. All webinars are free. And yeah, Giancarlo, usually on Wednesday for us, is now a couple of weeks in holiday. So in August, Jens Klatt will doing the webinars for him. Thank you. Tomorrow is another day, 5 days a week, 5 different traders. So hope to see you all live again tomorrow. Greetings from Berlin office. Bye-bye.